So what's going on here? It's something kind of an unexpected turn. After all, the experts at the World Economic Forum had predicted this booming American economy could hurt European trading partners. So far, at least by measure of the stock market, it's been the opposite. Doug Flynn will explain this for us, co-founder of Flynn Capital Management. Our friend Greg Ip wrote about it in the Wall Street Journal. I thought it was interesting today because I hadn't really noticed, and he was just showing this stock of chart of the European markets versus the U.S. I know longer term we've been doing much better, but
Sure.
Kind of interesting to see Europe kind of picking up now. Is that because they're spending so much government money, defense, and all the rest? What's going on?
I think it's a couple of things. The first thing, I think it has to do with the fact that, well, our market is about 40% more richly valued than theirs. Theirs is cheaper. We have, I mean, the last 15 years, we've averaged about 14% a year in our market. They've averaged about 7% per year. So we've dramatically outperformed them. And so, you know, they're cheaper. We've outperformed. That is a disconnect. And even though they're outperforming this year, I think part of the big reason is, do you know the percentage of technology stocks that are in the international market relative to the U.S.? Connell, do you know what that is?
I'm sure it's less than us, right?
Yeah, they only have about 8% of their market in tech, where we're about 30. And so a lot of this is on the backs of...
You thought you were going to stump me with that one. But if I
No,
give you
you're
a
very
big
good there,
answer, I'm going to be right.
Yeah, but most people don't realize that having 8% in tech is a very low percentage compared with us. And a lot of that growth and energy has come from the U.S. And so that's what got us here. And now you have sort of a weakening dollar situation, which has put some fuel behind the international market doing a little bit better. Because interestingly, last year, even though our market was up 25%, the international market was up 12%. But because the dollar got stronger, you only ended up with a 4% return in your international funds, because the currency does play a part in there. So now, if you have the same kind of return and the dollar weakening, you're going to get an enhanced return, which is what you're seeing so far.
Oh, that's interesting as well. Just bigger picture, though, we do so many stories about the tariffs, and there's this big trade war going on that we thought it would affect, sometimes big global stories like that affect the international kind of community the same, and that includes the stock market. Like we have a big shock like COVID or inflation after COVID. You know, we're all in it together, but it is interesting to see divergence here a little bit, I guess.
Yeah, and I would say that the EU has come out and said that they've sort of built in the fact that, you know, if they put in 25% tariffs from us to them, and then they match that back, they're going to lose about half a point on their GDP, and their inflation is going to be about a half a point higher, which I think is what the market is baking in. Now, if we don't get that, that's a boon to them. And you have to realize, like, Germany has been in a recession the last couple of years. That's the biggest economy in Europe. And they haven't had any growth at all in Germany in 5 years. So if they start to get their house in order, not just Germany, but across the EU, and because maybe it's because we're not supporting them as much and they need to, well, that's a good thing. Some more growth will come out of there. And they're all adopting more pro-growth policies. So that's a good thing for Europe. And so if you have some international diversification in your portfolio, that's a good thing. And then, of course, we're going to pick up our growth here, too, once we get on the other side of the tariffs here as well. And that's where we all globally are in the same house, and we want us all to move forward.
All right. Well, it's something different. It's an interesting look at things today. Thank you, Doug, as always. Doug Flynn with us. It's Closing Bell.